Assalamu alaikum. Welcome to my today's presentation on Principle of Finance. My name is MD Fahim Haque and my student ID is 1122010048. As part of Group 4, I was assigned to calculate the ratios of Khulna Power Company Limited and evaluate it by comparing with other companies under the power and fuel industry. Now I am going to start presenting my part. So the first ratio I'm going to talk about is fixed payment coverage ratio. It is a debt-type ratio which measures the firm's ability to cover its fixed charges such as debt payment, interest expense, equipment lease expenses. Here is the formula and the details can be found here. Let me check. Okay. Well, from the annual report, I found the data related to the ratio calculation, which is earning before interest and taxes, lease payment short term, interest, lease payment long term, principal, preferred dividend, which was 0 in my account, and the tax rate, which is 0.25. After using the formula, I found the ratio value to be 0.66 for the years 2020. And for the year 2019, the same formula was used and the value found was 0.69. There was no lease payment for the year 2019. Okay, let me switch to the presentation. So 1.25 is generally accepted as a good ratio where my calculated ratios are 0.66 and 0.69 for the year 2020 and 2019. The industry average was 0.53, which was very bad. Also, when compared to the year 2020 and 2019, the average condition was very poor. So the evaluation was overall condition of the company is poor. So the second ratio I'm going to talk about is return on equity or ROE. It is a profitability type ratio which measures how effectively management is using a company's asset to create profit. So here is the formula. Let me switch to the detailed calculation. Okay, these are the data needed to calculate the ratio. Earning before common stockholders, earning available for common stockholders, and common stock equity. After using the formula, I found the ratio to be 13.80 for the year 2020. The same formula was used for the 2019 and the ratio is 13.89. Okay, let me switch to the presentation again. So generally investors prefer 14% ROE to be acceptable and below 10% to be very poor. According to it, our industry average ROE is 34.02%, which is very good. And in case of Khulna Power Company, the ratios are above 10% or almost close to 14%. So in the evaluation section, I considered it to be okay for the overall company performance. So the third ratio from my part is price earning ratio. It is a market type ratio. In general, a high price earning ratio suggests that investors are expecting higher earning growth in the future compared to companies with lower price earning ratio. So this is the formula used to calculate the ratio. Let me switch to the detailed calculation. Okay, these are the data type needed to calculate the ratio. Market price per share of common stock divided by earning per share. After using the formula, I found the current calculated value of the ratio to be 13.44 for the year 2020. And for the year 2019, the ratio is 16.14. Okay, let me switch to the presentation again. Here, our industry average is 8.50 and Khulna Power Company's ratios are 13.44 and 16.14. So there is the possibility that the company is going to earn more in the future. That's why in the evaluation section, I found the overall company condition to be good. The fourth and final ratio I'm going to talk about is book to market ratio. It is another type of market ratio which indicates the company's current value. A high book to market ratio might mean that the market is valuing the company's equity cheaply compared to its book value. And this is the formula we are going to use to calculate the ratio. Let me switch to the detailed calculation. Okay, To calculate the ratio, we are going to need market price per share of common stock and book value per share of common stock. To get the book value per share of common stock, we are going to divide the shareholders' equity with the total number of common stock outstanding. Finally, using the formula, we get the ratio value, which is 1.86 for the year 2020. And for the year 2019, the ratio value is 2.24. Okay, let's switch to the presentation file. Here, our company average book to market ratio is 2.85, which is comparatively higher than the company's current calculated ratio, which means that the stock's value for the company is overvalued and is generally less preferred by the investors. So, in the evaluation section, we find that the overall company condition is okay at minimum. That was all on my part. I hope I was clear enough. And forgive me for any mistakes on my part. It was a great opportunity to learn from you, sir. Thank you and have a nice day.